In our stock market all-stars, we got Bob Froelich of DWS Investments and author of A Bull for All Seasons. We have Deborah Breedy, president of DK Breedy Investment Management. We have Peter Schiff of Europe Pacific Capital. He's the author of Little Book of Bull Moves in Bear Markets. Hello, everybody. Peter Schiff, you had a fun day today. The biggest winner was gold, up $30 to $944. Goldfields up 12%. Harmony up 12%. Buenaventura up 10%. Newmont Mining up 8%. I assume you're sticking with your gold play.
Sure, you're describing half my portfolio. I mean, I own all those stocks. And, you know, priced in gold, the Dow actually hit a new low today. The Dow Jones is now only worth 8.5 ounces of gold. And I think if you want to know what's really going on with the value of U.S. stocks, you've got to price them in gold. And the market continues to lose value. It's an illusion that stocks are going up. It's because of all the inflation that the central banks are creating.
Now, that's prospective inflation, because right now inflation's falling.
No. Inflation is the increase in the money supply. The price increases are the result of inflation, and they're coming.
Well, the money supply is growing like a son of a gun. No question about that. You and I may differ, Alyssa, because I think right now they're fighting illiquidity, and that's a good thing.
No, I think they're doing the wrong thing. You know, I think what the government is trying to do is recreate the very conditions that led to this collapse. Look at Geithner's speech. Look at his plan. He wants to get Wall Street re-securitizing credit card debt, mortgage debt, auto loans, student loans. He wants them selling them up to leverage hedge funds, selling them to foreign institutions, to foreign central banks. They want to reflate the bubble. It's not going to work, but it's going to be very bullish for gold.
Deborah Breedy, I want to ask you about Peter's gold call. I also want to ask you about Geithner's crash yesterday. He was up there mumbling some more on the Hill today, and he was just as vague and ambiguous and not in control of his policies today. And I want to ask you about the stimulus package. So we got all these federal things going on, Deborah. How are you playing it? Are you as gold-oriented, defensive as Peter Schiff?
No, I'm not. I'm not defensive with gold. I think to have a portion of gold with your portfolio, I prefer actually buying Treasury inflation protection bonds over gold. But I think when you're looking at the situation right now, we've got an administration, a government that's willing to spend and do whatever it takes to get the economy stimulated here. I think I look at it like a kid that's graduated from college that doesn't have a job but has a rich father that said, look, I'm going to get you what it takes to get you what you need to get going here.
And remember, tips, though, tips is like hiring the fox to guard your hen house. You're not going to get any inflation protection from the government. They're creating the inflation. All you're doing is getting a security tied to the CPI, but the CPI dramatically understates inflation. You get much better inflation protection by owning gold.
But at least you're getting some type of an interest payment. With gold, you're not getting that. And gold is not the end-all to everything. Look at gold, what happened in 80. Look at
what's happened to the price of gold in the last 9 years. The Dow has gone from being worth 43 ounces of gold to worth 8.5 ounces of gold. I think by the time Obama leaves office, the Dow could be worth just 1 ounce of gold.
And what if gold isn't worth there? What about the 1980s when it looked even worse than today? And the poor slob that bought it in 1980 was sitting there 22 years later saying, oh my God, I made nothing in gold.
But
so you have to really
gold
look at
in 1980 was like buying the NASDAQ in 2000. If you would have bought gold in 1970, it was $35 an ounce. And if you bought gold in 1970 versus the Dow in 1970, you're better off with gold.
Let me bring in Dr. Bob Froelich for 1 second. The other story is, of course, the CEOs on the Hill, Bob Froelich, and, of course, whether that mattered today. Banks had a good day, okay? We'll go through the numbers here. Banks up, the bank index up 6%, right? Citi up 10%, B of A up 9%, Wells Fargo, JP Morgan up 6-7%, Morgan Stanley 10%, Goldman Sachs 5%. Of course, the banks got killed yesterday. Let me ask you something. Just give me a quick quip here on this CEO show trial before Barney Frank's Financial Services Committee. What do you make of this?
You know, I mean, it was all politics, Larry. You know, it could have been a lot worse. I mean, when I looked at today, I was afraid it was going to be another really bad day for the market, a lot of bashing. But I think it became basically a non-event. It's just political showcasing was what's going on right now. And quite frankly, we need to get past that and get on to what's important, namely details in this stimulus package. I think the biggest problem we had yesterday was the fact that we had more uncertainty. I mean, when you open your mouth, you don't create uncertainty. Yes, I mean, you just Exactly.
Do you
and I
have
think that's the
confidence?
issue.
Well, let me ask you this. A lot of people are asking rough questions about Geithner now, that they feel he is not the expert. He is not the great technocrat. That, in fact, his answers were slow and sloppy, apart from the fact that he didn't reveal any details. How does this translate? Would you buy financials? Would you buy banks? Is it time now on the bet that somehow Geithner's going to make it all better?
Well, I will tell you something, Larry. I will buy it only because I believe that Larry Summers will continue to whisper in his ear. I think he's trainable. If I had to give him a grade right now, I'd give him an I for incomplete. He hasn't done anything yet. All he's done is created more uncertainty. So we have got to get this thing right. But here's what I love. I love the fact that monetary policy works. We've got a great monetary policy when interest rates are about zero, and fiscal policy is going to work. You might not like the inflation it creates, but it's going to work.
Oh, exactly it is.
All right. Dr. Bob, let me go around. What's your favorite investment now?
Right now, it's in the U.S. stock market. I'd be large cap, and for an aggressive investor, I'd be in financials right now today. If you're conservative, go in healthcare.
Deborah Breedy, would you be in financials?
I would do them selectively. I would have other things in the portfolio. I think there's just a lot of great American companies on sale right now, companies that are paying great dividends, and I just feel that we're going to be seeing some rebounds in the stock market.
Give me some examples, either sectors or companies.
Well, even look today at 3M. They came out and they announced that they're going to be increasing their dividend. They've had 51 years of consecutive dividend increases. I look at that, they're paying 3.9. The 10-year Treasury is only paying about 2 3/4. I mean, I think that's a tremendous way to play it. McDonald's is another one, 3.5%. People are having trouble struggling with money, so they'll maybe take their kids to McDonald's as opposed to eating out at a higher priced restaurant. I mean, they can definitely sustain their dividend. I mean, there's plenty of companies like that. Even Procter & Gamble, we need to have the, well, we don't always have to have baby diapers, dog food, soap powders, detergents, all that type of thing. I mean, they have a tremendous dividend, and I feel they've got a great brand name that's going to keep selling.
Peter Schiff and Larry, we have the bank CEOs are going to be eating McDonald's as well, so that's a great call on your part.
That's right, and for $1 a year salary.
That's right. Touche. Although, I don't know, they have to convert their restricted stock. Peter Schiff, besides gold, what are you doing, my friend?
Well, silver looks really good. You know, I like the gold stocks. And I love Asia. I love the high-yielding Asian equities, a lot of the China plays that got beaten up. There's some great buys out there. There's a lot of good companies that are trading for ridiculous prices. Just stay out of the U.S. markets, though. It's a disaster waiting to happen.
Are you shorting the dollar?
Well, everything I do is a play against the dollar. I'm buying foreign currencies. I'm buying precious metals, commodities. So those are all anti-dollar plays.
What do you say to people just on the way out, Peter, that the monetary stimulus, and I agree with you, the Fed is pumping in a lot of money. The Milton Friedman M2 is soaring. Now, I think that's a good thing. You apparently don't.
No.
But a lot of people say we're both wrong, that the credit clog-up is going to prevent that money from impacting the economy.
No, the credit clog-up is a good thing. The market is trying to restrict credit from consumers, which is exactly what we need. We need consumers borrowing and spending less. We need to free up that capital for entrepreneurs to invest in new businesses and new capital formation, and the government is interfering with that process.
Aren't you thrilled by the stimulus package, real quick?
No, it's not stimulus. It's a depressant. That's the problem. The problem isn't uncertainty. The problem is the package itself. We don't need any more stimulus. We're already suffering a massive hangover from all the stimulus of the past.
All right, we got to get out of here. Bob Froelich, Deborah Breedy, Peter Schiff, thank you very much. Coming up, CEOs in the hot seat in front of the House Finance Services Committee. I'm going to be joined by two key